Could interest rates go up even more than expected in 2022? And what the heck is going to happen with the real estate market anyways?
The definitive guide on how to manage your credit. Product, penalty, price, in that order. It's never been more important to get your mortgage right.
All right, welcome back to the first video of 2022. It feels great to be back in the home studio here. Today we are going to discuss 7 predictions for the real estate market in 2022. We're going to talk about mortgages, we're going to talk about real estate, and we're going to talk about how this all came about. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to now 25,000 subscribers, where one lucky winner is going to get $5,000 when we hit 25,000 subscribers. So go ahead, click the subscribe button, tell your friends, share this video. Let's get as many people to subscribe to this channel as fast as possible, so that we can give away that $5,000. So let's get into the video. Let's discuss 7 predictions for the Canadian real estate market in 2022. And let's start first and foremost with talking about the genesis of this. I was reading through the news this morning and I came across this article in Market Watch that is titled, "This Investing Legend Has Been Predicting Surprises for the Last 37 Years. Here's how he did last year and what he's forecasting now." And you can go on a Market Watch, you can find this article. But basically this article talks about the vice chairman of Blackstone's private wealth group. His name is Byron Wien. And basically what he does every year is he puts out 10 predictions for the US economy. And the way he does this is he goes out and tries to find things that have a 50-50 chance of happening, where normal investors would only think they have a 1 in 3 chance of happening. And he basically creates all sorts of predictions with respect to surprises that could happen in the economy in the following year. And the reason why they do this is try to stoke some creativity in their investment decisions when they look at the year going forward. So if you go ahead and you take a look at this, I found this quote really, really interesting. Surprise is defined here as an event with a better than 50% likelihood of happening, but that an average investor would assign a 1 in 3 possibility of happening. So what I did, taking some inspiration from this article, is I went ahead and tried to come up with 7 predictions, 7 possible surprises of my own that could come to fruition in 2022. And the reason why I'm doing this is I'm trying to stoke some creativity in your thought process and also get you to start thinking about some things that could be happening in the economy that may affect you adversely or may affect you positively and may make you want to change your plans going forward, because we often don't think about the future when it comes to our real estate and our houses and our mortgages. A lot of people just pick a 5-year fixed mortgage, which for so many reasons I think is the wrong thing to do, and they just let it ride for 5 years, every 5 years. And I think it's really important to start thinking creatively and to start thinking about forward thinking when it comes to mortgage and debt and financial decisions, especially around real estate. So the reason I put this whole thing together is to talk about the surprises that could happen in the economy. And by the way, it is the surprises that dictate the big things that happen in the economy. Think about the financial crash in 2007 and 2008. Think about the run-ups in the real estate markets in 2006, where inventory just suddenly went to an all-time low. Think about the pandemic that happened. Think about what's going on in China with Evergrande and the fact that you've got this really debt-laden company that is pretty much not able to make their payments, that's going to have a potential collapse in the Chinese real estate market and potentially have repercussions around the world. And what it comes down to is that it is always the surprises that have the big effects on economies, on interest rates, and so on and so forth. So, well, we can sit here and we can say, okay, it looks like we're going to get 1% increase in interest rates in 2022, and then maybe another 0.5% in 2023, and then another 0.5% in 2024. The reality is we don't know what the surprises that are going to happen are going to be. We don't know if there's some Canadian company that is having a bunch of debt that they aren't going to be able to make payments on, or that if we're going to have liquidity problems in our bank, the things that are going to have a major impact on the economy quite often are happening behind the scenes. We don't know that they're happening until it is too late for us to make our decisions on it. So what we do as a result is we look for the surprises in the economy. And this is one thing I've looked at since I became an economist, since I finished my schooling, is I've always gone ahead and I've looked at what the potential surprises in the economy could be. What is happening where no one is looking? Could there be a run up when everybody thinks that housing prices are going to go down? In 2015, a German bank, Deutsche Bank, predicted that Canadian housing prices were 60% overvalued and we're going to see a major market correction. And lo and behold, here we are in 2022, nowhere close to that prediction. The surprise there was that housing prices continue to go up when everybody expected that they would go down. And right now we're kind of in this purgatory period in Canadian real estate where many people are believing that housing prices are going to continue to go up. Many are thinking they have nowhere to go but down. And the question is, what's the surprise? Do they stay steady for the next 10 or 15 years? Do they go up substantially? Do they go down? Who knows? But if we look for the surprises in the economy and we kind of try to expect the unexpected, we can often make better financial decisions by looking at both sides of the equation. So let's get into this. Let's discuss my 7 potential surprises that could happen in 2022. Let me start by saying none of this is financial advice. Don't make any decisions based on what is being said here. These are just basically me spitballing ideas of what could potentially happen in the economy in 2022 and how you would prepare for it if that were to happen. So please don't make any financial decisions based on this, but do start to think more openly and broadly about economics and real estate and finances as a result of what you see here. So first and foremost, I think this is probably a pretty sound prediction. I think real estate in Canada is going to remain hot through June of 2022. I think we'll start to see it slow down in the fall in major markets like Toronto and Vancouver. We are obviously seeing in places like Calgary and the Prairie provinces, it actually starting to heat up. It's starting to catch up. I'll talk about that a little bit more later. But I think for the most part, we've still got another 6 months in this bull run of real estate. And if you're thinking about purchasing and you're waiting for it to cool off in the next 6 months, my guess is that probably won't happen. When we do start to see interest rates go up, we may start to see some relief in housing prices, but don't bank on that. If you are in the market for a home and you need to buy a home, my advice is always the same. It's to buy at the earliest opportunity that you have. Don't try to time the market, because if you do, like those people in 2015 who took that Deutsche Bank article and said, hey, housing prices have nowhere to go but down. Well, guess what? They got priced out of the market a long time ago. So buy at the earliest opportunity that you have and when it's right for you, and buy a house that's affordable and that you have a backup plan for if things like higher interest rates come around, or if you lose a job or lose your income or any other number of things. My second potential surprise that could happen in 2022 is interest rates may not go up as much as expected. We've seen the Manulife economists talk about the fact that there's probably only 2 possible interest rate hikes available in 2022. I'm not sure if that's a great prediction to make because it's pretty bold, but there is the possibility that as soon as we start seeing interest rates hike, we could see a deflation in the economy and all of a sudden them having to bring interest rates back down to where they are. Now, one of the big things about economics and economies is more often than not, what puts an economy into a recession is the actions that a central bank takes. So if we see a huge run up in interest rates, a 1% run up in interest rate, a 2% run up in interest rates, what that could potentially mean is that puts us recessionary pressure on the market. And if they don't handle it perfectly, we end up in this recessionary period and we end up having to have interest rates come down because of the actions that the central banks took. And by the way, central banks always have a tendency to overshoot on their predictions and have to make corrections. That's why you don't see interest rate graphs that go up in a smooth line. They're always jagged and pretty variable and up and down. That is because, again, they have that tendency to overshoot. Plus, there's always surprises in the market. Now, the third potential surprise is interest rates will go up more than expected. Now, this is a really interesting one here as well, because we could see inflation be something that continues to go on and on and on. And if it gets too out of control, the central banks may have no choice but to make a huge interest rate increase, and they may increase it by 1% or 2% or 3%. Now, nobody has suggested that they will do this, but that would be the surprise that could happen in the economy on an upside of interest rates, is they have to increase them faster than expected. And if they do that, what's probably going to be important is that you have flexibility in your mortgage. So again, no 5-year fix, because you want to have the ability to get out of your mortgage easily, which means you want to have a variable rate mortgage so that you can have a minimal penalty exposure. And you also want to have the ability to be able to refinance into lower interest rates should they start to come back down. So, not saying that interest rates will go up more than expected, but that's something that nobody's expecting. So there is a chance that it could happen. By the way, if you're in the market for a mortgage, if you have a mortgage that you feel is priced too high, if you are simply trying to get a lower rate somewhere, we have relaunched our Rate Secrets course, our Secrets to Getting the Lowest Interest Rate course. It tells you everything you need to know about negotiating with a broker, negotiating with a bank, getting the lowest rate, what comes with a discount mortgage, how much profit margin there is for you to negotiate on a mortgage, and all of the other things that you can include in your mortgage that you may not have realized that you can. So if you want to learn how to get the lowest interest rate, because I understand that not everybody just wants to come to Mortgage 360 and have us do it, and that's totally fine. You can go to ratesecrets.ca and learn everything you need to know, all the insider information, 18 years worth of data, 18 years worth of lessons, 18 years worth of putting people into mortgages. It's all there at ratesecrets.ca. And for a limited time, it's priced at $97 because my goal is this year to have at least 1,000 people go through that course. We had a substantial number of people go through it last year. A lot of those people also decided after taking that course that it was still in their best interest to come to Mortgage 360 and have us do it. And that was awesome because they got a $1,000 bonus if they chose Mortgage 360 to do their mortgage anyways. But I guarantee you, you will get at least 10 times your money back by taking that course. Again, on sale for a limited time, ratesecrets.ca. Prediction and surprise number 4 is inflation may grind to a halt in 2022. I do think that inflation is probably going to slow down. Now, this is really a double-edged sword because obviously we have supply chain issues, we have Omicron lockdowns, we have all these things that are happening. And to predict that inflation is going to grind to a halt seems like something that is way out of line and way out of left field. But I do think it's possible. I do think that the appetite for buying and spending that has happened in 2020 and 2021 could dry up, and that could lead to lower inflation, especially as supply chain issues unwind. Now, the opposite is also true. We could see inflation go up significantly more because there's this thing in economics that talks about the self-fulfilling prophecy, which is when people expect inflation, they start to buy things in advance of needing them because they expect the prices are going to go up, which in turn creates more demand and causes more inflation and subsequently higher interest rates. So it could go either way. The question is, are you prepared for both inflation coming back to normal, and also are you prepared for the event where inflation goes up substantially? You know, buying things that can sit on a shelf for a long period of time that you can buy cheap now is probably not a bad financial decision, because if you can buy it for half the price that you're going to pay for it next year, that's a 50% return on after-tax dollars. That is better than any return that you are going to get in anything like the S&P 500 or Apple stocks or Tesla or whatever your choice of investments is. Surprise number 5, people will continue to choose variable rates. Now, even as interest rates increase, we are seeing people start to recognize that that gap between fixed and variable rates is something that actually has a potential to save you a lot of money, especially if prediction number 2, which is interest rates won't go up as much as expected, comes true, because then you've saved a substantial amount. And what we're seeing is we're seeing smarter and smarter Canadians. We're seeing smarter and smarter mortgage brokers and mortgage professionals. And there's really been this leaning towards variable rates, primarily because so many people over the last 15 years have gotten burned on their 5-year fixed rates with their massive penalties. And those penalties have cost way more than a 1 or 2% increase in interest rates would have ever cost those people. So what people are determining is that being flexible in your mortgage, having the ability to pay it out, and taking advantage of those savings up front where you're paying a significantly lower interest rate for at least some period of time are advantageous, and they are a good financial decision. Even in the face of rising interest rates, which we've never seen before, people are choosing these mortgages. It's not because we're telling them to choose their mortgages. By the way, one of the big misnomers on this channel is that I've been encouraging my clients to take variable rates versus fixed rates. The reality of it is I don't make those recommendations and say you should absolutely take a variable rate over a fixed rate. But what we do is we talk about the differences between the two. We talk about why it might make sense to take a fixed, why it might make sense to take a variable. Then we talk about the actual dollar differences. And when we put the dollar differences in front of people, that's what encourages them to take a variable rate, not anything I say. So, you know, going forward, I think we're still going to see people choosing variable rates because of those dollar savings, taking a little bit of risk, but having a good strategy associated with taking the difference between the payments and putting it aside and investing it will obviously lead to a lot of savings for people. And it's a pretty common sense decision when you look at the numbers. Now, the other side of that is we could see interest rates start to go up. People start taking 5-year fixed mortgages because they get scared or terrified because interest rates go up too much. And that could prove this surprise and this prediction wrong. Surprise number 6 is markets outside of Toronto and Vancouver will start to catch up. We're already seeing this in Calgary over the Christmas holiday. We saw many offers in multiple offer situations. We are already seeing a ton of activity in the Calgary market, in the Edmonton market, in the Regina market, in the Winnipeg market. We're seeing things just start to heat up. Not seeing that so much in Ontario or Vancouver. Keep in mind that we do mortgages in BC and Toronto, as well as Saskatchewan and Alberta. So we kind of have a feel for what's going on in different markets. But what we're seeing that the hot markets that were happening in Toronto and Vancouver are starting to spread to the smaller markets, which is really an interesting development and something that's going to be fun to watch over the next year with respect to the housing prices in places like Calgary and Regina compared to places like Toronto and Vancouver. Also, we're seeing an influx of people from Ontario and Vancouver moving to the prairie provinces or moving out east because it's cheaper to live. They can still do their jobs and have a smaller mortgage payment and smaller bills. So really interesting time in the market. We'll see what happens there. Prediction number 7, surprise number 7. I don't think this one's going to be much of a surprise to anybody. I think rents are going to rise substantially as leases come up, as borrowing costs get more expensive, as the market heats up. We're going to see rents go up over the next 12 months. And subsequently, what that is going to do is it's going to make the condo market more attractive to renters as they start to see their rents be more costly than what it would be to purchase a similar condo. So subsequently, we're going to see those rents rise, and we're going to see people making that shift that they did in 2006, 2007 from renting to those small apartment style condos where they own it. They get to pay off a little bit of their mortgage every month instead of their landlord's mortgage every month. And it ends up being a better situation and a better solution for themselves. So those are my predictions for the 2022 real estate market in Canada. And not again, my predictions, but the potential surprises that could happen. Again, designed to get you thinking about your mortgage strategy, your financial strategy, your real estate strategy. Again, we're still big believers in variable rate mortgages. They're basically on a fire sale right now, and you can get in for very low rates. At the end of the day, though, if you found this video just a little bit useful, do me that favor, hit that subscribe button, hit that notification bell. Tell your friends, share this video. Don't forget about a race to 25,000 subscribers, and we'll see you on the very next video. Cheers.